All right. What is going on, everybody? What is going on? Your boy is back. Your boy is finally back. Now we got to go ahead and talk about it. Let's go ahead and talk about SoFi stock real quick. For those who recall, I made a video about SoFi maybe about a few weeks ago, a month ago, something like that. And when I first talked about SoFi in the video that I made, I literally named the title, "This Stock Could Make You Rich." And the reason why I said that is because this thing was so ridiculously oversold. It was so undervalued. I mean, this thing, when I made the video about SoFi, it was at $13 a share. And I'm just like, that makes no sense for how great of a company this is. And yeah, so I went ahead and broke it down. I explained what the company did. And I basically put on my Instagram and said, I'm loading the boat on this thing. And I loaded the boat on SoFi, and fast forward a few weeks later, SoFi is now sitting at sitting at $19 per share. And we're up about 35-40% in this play. I mean, we're absolutely killing it. And I think this place still has more room to grow. I mean, this is a phenomenal company with a lot of catalysts coming up down the pipeline, especially that bank charter. That's the big one. And yeah, just want to say shout out to everybody who got in SoFi when I made a video about it, and really happy for everybody who's made the great gains. So let's go ahead and just get into kind of overall how I'm feeling about the market. So we're starting to see a lot of people talk about, there's going to be a market crash. There's going to be a big correction. You've got Robert Kiyosaki, the guy who wrote Rich Dad Poor Dad. He's just sitting over here like, oh, the market's going to crash. The mother of all crashes is coming. And it's just like, how about no? So my whole thing with that is, if you just look at the overall market and the overall state of the economy, these hedge funds and banks have trillions of dollars in cash on the sideline. And there's just not a lot of fear or any real reason for there to be a correction. I think the main reason that people are saying there's going to be a correction is because the S&P 500, the Dow Jones, haven't had a correction in so long. It's been about a year and a half, 2 years almost. So I kind of think that's why, it's been a really long time. But besides that, there's no real reason. And for me, I feel like early October, you had a bunch of fear catalysts. You had the Evergrande thing with China, the big real estate leverage firm, whatever that thing. I don't even know fully what Evergrande is, but I have some idea. But yeah, anyway, you had the Evergrande thing. You had the debt ceiling thing, which was a bunch of crap because they literally fought over it. And then there was all this drama with Joe Manchin and the Republicans. And then at the end of the day, it came down to the last minute. And then they passed the bill to raise the debt ceiling. So that was really the true definition of a bunch of FUD. I mean, seriously. So you had all these different fear things going on with Congress and Evergrande and whatever's going on. And at the end of the day, I think the market is going to continue to go up. I don't see a correction happening at all this year. I'm just going to be honest, because there's just too much cash on the sidelines. And what these big banks and these big hedge funds do, and what rich people do, is they don't sit in cash. That's not how that works. They invest it. So all that cash that's sitting on the sideline is eventually going to get invested. As a matter of fact, I think it is getting invested because we saw a few dips in late September, early October, and the little dips we got were immediately bought. And then the market kept soaring because there's so much cash on the sidelines. So I'm really bullish going forward for the rest of the year. I mean, if you want my honest opinion, I think whatever money you got, you should be buying stocks, and whatever dips you have, you should take advantage, because I think we're going to keep rolling. I think we're going to keep going higher, which brings me to my next point. We had a really good week last week on NEO. Posted on my Instagram, I said numerous times, buy NEO, buy NEO. It's a screaming buy at $33. And here we are. We're sitting at that $37, $38 range. And here's the crazy part. Even at this $37 range, this $37, $38 range, I still think NEO's a buy. I still think it's a buy. I'd still buy it at this price. NEO is just so significantly undervalued for what this car company is going to do going forward. I mean, if you want my honest opinion, I like Lucid Motors, but I think NEO is going to be the next Tesla in terms of growth, in terms of what they're going to do to the world and the popularity of what I think their cars are going to be. And so I'm a big bull on NEO. I think anywhere under $38, I think 38, 37, 36, 35, whatever, I think NEO's a buy. I think NEO is a great company, and I think that it's a buy. So for those who weren't able to take advantage and get NEO at $33, you're definitely free to take advantage and get it at $37, $38. I still think you're getting a great deal and a great bargain for the long term. And so that's pretty much where I'm at with it. I'm huge on NEO. In terms of what to buy next, I really, really like ChargePoint at its current price. I mean, it's currently sitting at $19 a share. And when it was at the $18, $17 range that it hit within these last few weeks, I did start to buy a little bit more and add more to my position. I really, really like ChargePoint. And in my personal opinion, under $20 is a fantastic buy for this company. I think it's significantly oversold and undervalued. And I mean, if we're being honest, ChargePoint controls about 70% of the market share. And in my opinion, as more EVs start hitting the road in the coming years, there's just going to be a higher demand for more charging stations. And in my opinion, ChargePoint has really, really perfectly set themselves up to take advantage of this new EV world that we're going to see in the future. And so I think a lot of people are going to look back at ChargePoint at this price and be like, man, I should have bought as many shares as I could under $20 because their profits are only going up. The last earnings call that they had, they did raise their guidance. And yeah, I really, really like ChargePoint at this price. I think it's a super strong buy. And when it went to $17, I watched it. And then once it started to bounce from 17 and move to 18, that's when I started to buy a little bit more. So I'm pretty comfortable with buying at $19, $18, anywhere under $20 is a screaming buy for me. I mean, I think this stock will be much higher in the future. And yeah, so NEO and ChargePoint are my two buys for this upcoming week. Obviously, I'm going to watch the chart so I can try and get them for as low of a price as I can. But yeah, those are my two stocks for the week. So thank you all for watching this video and hope you enjoyed it. Feel free to like, share, and subscribe. And till next time.